Welcome to Trading Nation. I'm Brian Sullivan. We are pleased to be joined by Jeremy Siegel, professor of finance at the Wharton School, a man who needs no introduction, but we gave him one anyway. Professor Siegel, thank you very much for joining us. As of this taping, and this is not live, so as of this taping, the Dow is once again within points away from Dow 20,000. I mean, we broke 19,900 back on December 13th. Why do you think the market has kind of stalled out here in the past couple of sessions?
That seems to be there. It kind of has this
It's a tease.
fear of heights, right? Fear of flying. Yeah, I mean, historically, actually, if you go back in history, the week between Christmas and New Year's is usually a very good week. Actually, historically, it rises 1%, which would easily break 20,000. But in the last couple decades, actually, it hasn't been so good. In the last few years, it's not been good. So I don't know. This Christmas New Year rally is not anything we can count on. And again, there's a little bit of concern of some supply on stock on January 1st. A lot of people expecting, Trump to lower the capital gains tax if it becomes effective in 2017. It means you certainly want to wait a few days. Most people have gains given the good market. There's some talk. I heard Art Cashin earlier today talk about that some pension funds are going to reallocate their stocks and bonds and away from stocks. I think it's a mistake, but that's the proportions that they do. So I think there's a little concern that's keeping the lid on stock prices this week.
Yeah, and I guess I understand the professional traders. They probably don't care about 20,000. It's just another number for them. They care more about technicals and whatever. And also we've got December 31st, January 1st, really just a date on a calendar. So I get all those points. But from a guy that you've studied sort of the behavioral side of the business as well, is there anything to this sort of round number theory that we in the media love to latch onto? Do people care? It makes the front page of the local paper. Does that matter?
Yeah, I mean, it's a benchmark. It's a benchmark. It's like
batting 300
or 5,000. Whenever you do something, if you, whatever you accomplish, these round numbers just are benchmarks in the way we think about numbers in general. No one would get excited when we break, 19,284. But you can remember 10,000. Remember the hats on the floor of the New York Stock Exchange and the cheers that went up. I mean, it is more just human nature to celebrate benchmarks. And you're right, that's all it is. But human nature comes through.
Yeah, it does. And do you think 20,000 will mean more buyers actually come into the market?
Well, actually what we've seen, I was going back to the history of 10,000. It peaked above in a few days but couldn't close above for almost a week and a half. So, all this idea like everyone's putting buy orders in when it gets to 20,000, I'm not so sure that's going to happen. But once it did break through convincingly, a lot of buyers came through. But remember, it was 1999, and we were in the throes of a huge bull market. And, of course, the Internet tech bubble was, boiling at that time. We're really not anywhere into the type of euphoria that existed when we passed through 10,000.
Okay, and if we're looking at this bull market run that we've had the last number of years as a baseball game, we made already one baseball sort of metaphor this interview. Where would you say we are? What inning?
Well, I've been, and a lot of people thought it was the ninth inning, and I've been, saying it's, sixth, seventh. If we get above 20,000, I think we're seventh and eighth. If we almost got that, correction. We did get the correction, but when is the next 20% drop going to be? I mean, it could be a couple years away. And in the meantime, it could go up 30%. So, a lot of people who say, I'm going to wait till that 20% drop, two things happen. First of all, it goes up 30% in the meantime, so even then they would be better off. But secondly, once it drops 20%, these guys are never going back in. Oh, my God, look at the market's falling apart. I'm not going in. So, I think stocks represent really good long-term values now. I see the earnings recession, I think, is over. We're seeing a meaningful acceleration. Interest rates, yes, are going up, but still very low. Stocks still have huge edges over bonds and other investments, in my opinion.
All right, still optimistic and says that 20,000, may not be the be-all, end-all, but it does matter in its own way. Professor Siegel, always a pleasure to get your views. Thank you. We'll see you soon.
Thank you very much, Brian. Happy holidays.
Take care. Folks, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.